welcome to Palm Beach Senior Chat. My name is Marina Ramirez, and I'm here with JD Dinnocenzo. Hello, JD,
Hi,
and welcome to Assisting Hands. How are you?
Good. My pleasure to be here today.
Well, we are very happy to have you today because we know you're a super expert on reverse mortgages. Can you tell us a little bit about your background, please?
Yes, I've been in the mortgage industry for over 20 years. I've been doing reverse mortgages for just about that much time, 20 years. I also do traditional mortgages. I am a certified mortgage planner. I'm also a certified senior advisor, and I am a reverse mortgage specialist.
Very good. Can you tell us a little bit about the history of reverse mortgages, please?
Mm-hmm. Sure. Reverse mortgages have actually been around for over 60 years. It's only been within the last 5 years that the product has moved more into the mainstream. But the initial reverse mortgages were private reverse mortgages done by banks. Unfortunately, the early reverse mortgages didn't have sufficient safeguards in place. So in the 1980s, under the Reagan administration, the Department of Housing and Urban Development, HUD, and FHA brought the product under their oversight, actually created an entire new product called the Home Equity Conversion Mortgage, or as we refer to it in the industry as the HECM.
But that name has not stopped, right?
It hasn't. People still refer to the product as a reverse mortgage because it has some of the similar characteristics, but in actuality, they're more different than they are alike.
Yes. So what are some of the myths that are still out there that you would like to debunk about reverse mortgages?
Sure. Probably the largest misunderstanding is that the bank owns the home. In that, with the HECM product, the homeowner always is owner of the property. Title stays in their name.
Correct. Until when?
Until they no longer occupy the home as their primary residence.
Okay.
And at which time that is the end of the reverse mortgage or the HECM.
Okay.
So in a traditional mortgage that we would do, like a 30-year fix, it has a beginning and it has an end.
Correct.
With the home equity conversion mortgage, it has a beginning, which is when we originate the loan. The end is only when the homeowner no longer occupies that home as their primary residence. So it might be 10 years, it might be 15 years, it might be 18 years.
Correct.
But when if a husband and wife are on the mortgage together, when the last person no longer occupies the home as their primary residence, then the mortgage becomes due and payable.
Okay. Another common misconception, I understand, is that the home must be free and clear. Is that true?
Actually, it is not. In probably about 50% of my cases today, we're actually paying off a traditional forward mortgage with the reverse mortgage proceeds.
Oh, okay. Okay.
So we're eliminating a mortgage payment for the homeowner.
Are there restrictions on how people use the proceeds of a reverse mortgage?
Absolutely not. The money that we give to the senior is comes to them tax-free, so there's no tax consequence. They're entitled to use their money in any way, shape, or form that they want. Does
the bank keep some equity in the home after it is sold?
No. If there is equity left in the property once the homeowners move out,
okay.
Typically the way the mortgage is satisfied is by selling the house. It doesn't have to be, but that's typically what happens. If there's equity left, it belongs to the homeowner if they're still living. If they've passed, it belongs to the estate or their heirs.
That's very interesting.
What's more interesting is if there is no equity left. These are considered non-recourse loans, which means you can never owe more than the value of the home, regardless of what the balance is.
Okay.
So if the balance exceeds the value of the home, we would, in the traditional world, we would say they're upside down or they're underwater, right? That's impossible in a reverse mortgage because it is non-recourse. So what happens in that situation is the home, again, is typically sold. The deficiency is paid through FHA's mortgage insurance fund.
So
right?
the family or the heirs are not liable
Correct.
for that?
If there is any deficiency, they would not come after the homeowner if they're still living, the estate if they pass away, or the heirs. Right. So it's kind of a win-win situation.
And what are some common uses for reverse mortgages?
Well, it's changed over time. 20 years ago when I started selling this product, it was seen and used primarily as a needs-based product, right? People had run out of money. The biggest problem seniors have today is that they're living too long.
They're living too long, and their biggest asset is their home.
Right. Modern medicine is somewhat of a double-edged sword because, again, people live longer because of medicine, but they didn't plan to live as long as they did, right?
We see that all the time.
So 20 years ago, again, it was used as primarily a needs-based product, and we were either paying off people's existing mortgages to increase their cash flow, or we were giving them money to live, right? Today, probably that's the exception rather than the rule for my clients. Most of my clients are using the home equity conversion mortgage as a financial planning tool. Right? Because the traditional components that we have always seen for retirement planning is Social Security, savings, and pension.
Correct.
Right? So what the financial planners and estate planning attorneys have realized is the home is typically one of the largest assets seniors have today. So they're incorporating the home equity as the fourth component of retirement planning. Right? So again, the use of the product has changed dramatically. We still have needs-based clients from time to time, but they're more the exception rather than the rule today.
Let's talk a little bit more about the specifics of a reverse mortgage. For example, is there a particular term?
No term. Again, there is a beginning. The end is only when the homeowner no longer occupies that home as their primary residence.
And are rates fixed or variable?
Well, it depends. We have both, and we use the different products for different purposes. Right? So typically, the adjustable has much more flexibility in terms of distribution options. So we can, with the adjustable product, we can give people some cash if they want it. We can give them a credit line if they want it. Or we can give them a monthly payment for the rest of their life if they want it. Typically, what people do with that product is they mix and match. So they might need some cash at closing, and then they oftentimes will keep a credit line for emergency purposes. The fixed rate product, while it has no interest rate risk, and most people like that, is a little less flexible. We use that for when someone's purchasing a home. Or if someone's paying off a large forward mortgage, right? The downside of the fixed product is there's a one-time distribution, and it must be at closing, right? So most clients want to have the ability to access their funds in the future, even when they need it.
I understand. So one works more like a line of credit with variable rates depending on when they take the money out.
And the rates are very competitive with what we see in the forward world, right? So the last couple of loans that I have closed have been in the 4% to 5% range.
That's perfect.
Both adjustable and fixed.
Very good. Now, let's talk a little bit about what are the obligations of the homeowner when they take out a reverse mortgage?
Well, they're relatively simple. They must pay their property taxes. They must pay their homeowner's insurance, and they must pay their homeowners association fees. This is something that you and I would do with any.
Well, that doesn't change from what they were doing before. So it's not an additional cost they have. They retain ownership of their home and their responsibility.
Exactly, right? Except they don't have a monthly mortgage payment. So what do you see in the future for reverse mortgages? Well, personally, I think it's a product that we're going to see used much more because, the financial planners have figured out that this is can be a valuable tool in retirement planning.
Yes.
Right. Couple that with things like we know that 25% of Americans over the age of 50 have no savings. Right. Baby boomers have been a generation of spenders. 1 in 5 Americans don't think that they're going to have enough money, or they're going to feel comfortable in retirement. They're going to have enough money. So tapping into equity in the home is probably going to continue to be something that's it's done for years to come. I think it's going to be an expanding product for me.
I do agree. I see many benefits, particularly for people who want to age in place and live in their own homes, and they don't want to affect their savings. This is a fantastic tool.
Absolutely. We know that 80% of the senior population would like to stay in their homes as long as they can, right? As long as they're safe at home, right? This can be the means to allow them to stay at home, right? Moreover, sometimes we have cases, or I've had cases where one of the couple needs extra care. So they may need to be in a assisted living facility or a nursing home, but the spouse doesn't, right? Funding that care can be a challenge, right? You can burn through savings pretty quickly. So tapping into the equity to fund the health care is a common use for the home equity conversion mortgage.
I definitely agree with you, and I think many more people will see the benefit and will start using reverse mortgages in the future. So there's more than one reverse mortgage specialist out there. Why should people use you, JD?
Well, there are a lot of folks doing it, and a lot of the people have jumped on the bandwagon in the last few years, right? I like to think that because of my depth of experience, I bring more to the table. I certainly don't think that reverse mortgages or home equity conversion mortgages are the right solution for everybody. No matter whether I'm dealing with people in the forward world or the reverse world. One of the things I do is I ask a lot of questions at the beginning of the interview and to determine exactly what type of product they need. And I would tell you that I've probably told 20% of the people that have come to me for a reverse mortgage that it wasn't the best solution for them. As a certified mortgage planner, I'm trained to match the right product with the needs of my client.
Well, I appreciate that. I mean, it shows a lot of honesty on your part because some people just want to make a sale.
Yeah, I've told people that people have come to me and said, my attorney told me to talk to you about a reverse mortgage, and after talking with them, I said, this is really what you need. You need a traditional mortgage, and again, we put people into the product that best suits their needs.
Very good. Well, thank you, JD, for being here with us today. It's been a total pleasure, and thank you for watching Palm Beach Senior Chat.